Welcome to Success Series. Today we are going to talk about taxation of clothing allowance. Now, what is clothing allowance? Clothing allowance is a personal allowance and therefore should be subjected to tax. So, under employment income taxation, all forms of allowances are added together and subjected to the graduated income tax schedule. So that applies to clothing allowance. So clothing allowance is considered as a domestic expenditure and therefore should be included in ascertaining the employment income unless the clothing allowance is not suitable for wearing outside of work or has a duality of purpose. So this is the exemption over here. That clothing allowance is not considered as a domestic expenditure and therefore shouldn't be included in ascertaining the employment income unless, so the key word, unless the clothing allowance is not suitable for wearing outside of work. So let's look at the instances in which clothing is not suitable for wearing. Let's look at the instance in which it can be so. So clothing not suitable for wearing outside of work. 1. The employer's logo is clearly embossed on the uniform, dress, or clothing. So where you have the employer's logo, the logo of the employer embossed on the uniform, dress, or clothing, then is a clothing not suitable for wearing outside of work. However, if it's just a detachable badge, then it doesn't make it more uniform. So that one is not part when we talk of clothing not suitable for wearing outside of work. Secondly, it is customized with the name of the employer written on it. So whereby the name of the employer or the business is being written on it, then it is clothing not suitable for wearing outside of work. Thirdly, when it is a safety clothing, some works have safety clothing which are used for that specific job. So that also forms under clothing not suitable for wearing outside of work. Fourth, it is a ceremonial clothing of the employer. So in a case whereby the entity have a ceremonial cloth, that clothing is not suitable for wearing outside of that work. Fifth one, the employee would rarely be recognized as wearing a uniform by a person in the street. So whereby an employee is at a far distance and we see an employee from a far distance and we see that the employee is wearing a form of a uniform, then we see that then that kind of uniform or dressing is seen as clothing not suitable for wearing outside of work. However, we should note this, a key thing we have to note. Notice that some official wear may be worn off duty and therefore cannot be considered as clothing not suitable for wearing outside of work unless the rules of the employer restrict its usage outside work. So some people have an attire that they wear in the office, although it may seem a bit of an official attire, but they may wear at the office and at the same time they can wear it at home. In that instance, you bear in mind that this is not clothing not suitable for wearing outside of work. However, in a case whereby the employer restricts its usage, then we classify that item as clothing not suitable for wearing outside of work. Now let's look at some examples. So uniform provided by the employer and worn by police officers, army officers, fire officers, customs officers, nurses, pilots, cabin crew, immigration officers, and as such institutions which prescribe uniform and dress code such as gowns and wigs of judge would be examples of clothing not suitable for wearing outside of work. Now let's look at, in the case of employers, why we are looking at taxation for clothing allowance. It was because of those in the banking sector. Let's look at what applies to them over there. So employees of members of Ghana Association of Bankers involving clothing allowance. So according to a class ruling issued by the Commissioner General of Ghana Revenue Authority on 23rd December 2020, what was this class ruling about, or what resulted about into this class ruling? The Ghana Association of Bankers may raise an issue that their clothing allowance is seen as an exempt and therefore should be allowed as an exempt amount. So based on this, the Commissioner General issued a class ruling on how the clothing allowance of bankers should be accounted for, and it states that 20% of the clothing allowance received by employees of members of the Ghana Association of Bankers shall be treated as what? Reimbursed expense, and exempted from tax from December 2023. So from December onwards going, yes, that particular 20% of the clothing allowance should be what? Exempt. It should be exempt. it should be exempt from tax. Also, however, we have to take note of this. It said, however, this exemption is limited to 5% of the employee's basic salary. So, although we are supposed to take 20% of the clothing allowance, in the case whereby it exceeds the 5% of the basic salary, you only have to maintain it to that exemption amount, which is 5% of the basic salary. So the amount should not exceed. In the case whereby it exceeds, just maintain it at the 5% of the basic salary of the employee. So let's use a question to illustrate this. So question: Mr. John Asamoah was employed by Prudential Bank on 1st January 2023 with an annual basic salary of $140,000. John is entitled to the following additional allowances: professional allowance of $30,000 per annum, clothing allowance of $32,000 per annum required. What is the tax implication of clothing allowance? B. Assuming the annual basic salary of Mr. John is $120,000, what is the tax implication of the clothing allowance? So here first we have to note the annual basic salary, which is $140,000, because bear in mind here this is the amount you're going to calculate the test amount on. So the A, our basic salary is what, $140,000. When it comes to the B, the basic salary has changed to $120,000. And should bear in mind, you should know our clothing allowance also here. That clothing allowance is $32,000, which we are going to calculate the 20% on, which will be the exempt. So now let's dive into our solution. So here we will bring the 20% of the clothing allowance, which is the exempt. So we'll first charge 20% of the clothing allowance, which is $6,400. Then we'll test. You have to test and see that this amount is exceeding 5% of our basic salary. So let's check. So 5% of on 140,000 is 7,000. So we can say that it's not exceeding. If it's not exceeding, then we don't have a trouble. We'll maintain a 6,400 as the exempt amount from the clothing allowance. So let's look at the remaining amount that will subject to tax for the clothing allowance. So we'll bring our total clothing allowance, which is 32,000. We'll bring the amount that we have to exempt from the clothing allowance, which is 6,400, and then our total is 25,600. So this is the amount we will subject to the graduated income tax table. We'll add it to our implement income and then subject it to the graduated income tax table. Let's show how we are going to include that in our employment income. So first, we have to bring the name of what, the employee, which is what, Mr. John Asamoah. We bring the heading, which is computation of employment income for tax purposes. Then we'll bring out our first item is the basic salary. We'll bring our basic salary of 140,000. We add our allowances, which is the professional allowance, which was given to us in the question, 30,000. Then we'll add our clothing allowance, which is 25,600. Then the summation of this, the clothing allowance, bear in mind that we have subtracted the exempt amount from it. Then the summation will give us 195,600. 195,600, and this amount is what you are going to subject to the graduated income tax table or the income tax schedule. So here it says that the amount of the 195,600 shall be subjected to tax using the graduated tax rate. Then let's move to the B aspect. The B aspect is the same thing. We have to charge 20% of the clothing allowance, which is going to be the exempt. So we bring that one first. 20% of the clothing allowance is still our 6,400. Then we'll test. Bear in mind over here, this base salary has changed to what, 120,000. So let's test and see. 5% of the 120,000 is giving us what, 6,000. So in any case, you can see that here the exempt amount that we are supposed to charge is rather more than the maximum figure we are supposed to charge. The test amount is higher. So here, what do? It means that here it should not exceed 6,000. So we only maintain what, 6,000. So 6,000 will only be the amount which is exempt from the clothing allowance. In this case, we will bring our total clothing allowance, which is 32,000, and then we'll subtract the exempt. And here, bear in mind, the exempt is the test amount over here, because the amount when we calculated it exceeded the test amount. So here we are going to bring the 6,000, we subtract, and then we'll know the remaining one that will subject to the employment income taxation, and that's what, 26,000. Then we go through the same procedure of including into our employment income. So first bring the name of the employee, which is Mr. John Asamoah. We bring our heading, computation of employment income for tax purposes. We bring our currency sign. We bring the first item, which is the basic salary, and bear in mind it's 120,000 now. Then we'll add our allowances. We're having professional allowance, and then we'll add the clothing allowance that we calculated, the one we are going to subject to a tax, and which is 26,000. We add this all together, we get an amount of 176,000. Then we subject this one to the income tax schedule, or the graduated income tax schedule. So we'll subject it to the graduated income tax schedule. Thank you.